Hello and welcome. Today I'm going to be going over a strategy that I've been developing over the past 3 or so weeks. Still a work in progress, but I wanted to come up with a system that was super easy to understand. I have a Discord room where it's completely free, but I help out a lot of people if they need it, and I'm always trying to come up with strategies that are very easy to understand, that they can adopt and make changes as they see fit. So what I came up with, a few, of course, but the one that proved best via backtesting, via Thinkorswim's on-demand feature, was the ATR trailing stop. Now, if you are to go to your studies, well, first off, this strategy will include the 3 time frames. I like the 2-minute, the 5-minute, and the 15-minute. I like the 2 in the middle because that's the one I like to trade off of, but of course you can have these any way you want. So first what I'm going to do is I'm going to add the default trailing stop from Thinkorswim, and I'm going to remove mine really quick so that you can get a visualization of the changes that I have made. So you'll see these blue and purple dots that you probably know pretty well. Powerful indicator. Everyone, it's the ATR trailing stop we all know and love. Now what I have done is I wanted it to produce buy and sell signals based on the average true range. And you could do it with these setups, with these parameters, but I have tweaked it so much that I think I have found a pretty powerful combination. So the default settings are a ATR period of 5, which is just how many bars look back period. The factor is 3.5. The average type is Wilders, and of course this is just the plots, so this would be up to your preference, however you want to visualize it. What I am suggesting to do is change the ATR period to 9, the ATR factor to 2.5, first trade, whatever you want. You know, this will determine how it's initialized, should it start long or should it start short. Now the average type changed to exponential. And then from there, what I did was I turned it into a line instead of dots. And I did buy is green, sell is red. Just a preference. I like that dashboard style color of green is go, red is stop, and width is 2. So you can see the default settings there, and as I hit apply, it'll replace it with these new custom settings. And I do have a bit of a lot of indicators on, so it might be a little bit slow. So I'm going to start on June 8th, 2023, and I'll kind of just work my way up through the up until present day and show you all the situations where there could have been trades. So that, again, just to reiterate, this left hand side is the 5-minute, this is 2-minute, this is 15-minute. So the 2-minute is where I am watching constantly. More likely that's where you'll get your signals first, is your 2-minute. So what I want to see to buy, to go long, is a cross above the green line. So a candle close above. So just like this green candle here. And the opposite to go short. So a close below the red line. Looks like a scalper indicator just just caught up. That's why the candles changed colors. So a close below would be the same thing. Just a close below would be going short. Now we've added multiple time frames is because we want agreement between those time frames and those studies. So I won't go long on this trade unless the 5-minute chart agrees and unless the 15-minute chart agrees. So it makes it highly selective, and that's what you want. You want A+ trades. That's it. You don't want trades that it doesn't quite fit it. No. This is a zero-sum game. There are no room for emotions. Just keep it to trades that you have the most chance at success. And tripling up these time frames really does help with that. Even per Mobius, he also echoes the idea of having 3 time frames. There's no better way to trade. And he likes to even do it on a longer third. 15-minute is very small. 2, 5, and 15 small, but I trade directional options, day trading them. So I like it really small. I want to know what's coming up in the next 20 to 30 minutes, not so much the next day or two. So the hour chart, I do actually have that up. This is actually a 49-inch monitor. So on the right side here, which you can't see, is the 30-minute and a daily chart. I also have that up to the right of these 3 charts. So let's find a good example of where I could go long. If you'll see here, right at open at 9:30, we kind of got across. That looks like it barely crossed, if it did at all, for a close. But on the 5-minute, that did not happen. So that would negate that long trade. Now, if we were to go short, we closed below this red line on the 5-minute. We also did, but on the 15-minute, we did not. So that would also negate that short trade. So again, very selective, but you want it to be in the first half hour. I don't like to trade the first half hour anyway. So if it's going to be jumping all over the place, I want to know for sure I'm on the right side of the trade. And that is specific, and that is very important to determine before taking a trade at 9:30. Like, you don't want to buy a ton of calls at 9:30 because the first candle closes green, because 30 seconds later it could drop 75 cents. So I really want it to be selective, specifically in this first half hour. So I've also added the EMAD lower study on the 15-minute, and I'll show you when that'll come in handy as well. So a little bit fast forward, 10 a.m. the ripe time to start trading, in my opinion. 9:45 to 10 is my sweet spot. And wouldn't you know, at 10:04 we get across above our green long line. If we look over at the 5-minute, that doesn't occur until 10:10. So that would put us, about here on the 2-minute chart. So we had to wait a few minutes, but that's perfectly fine. And if we look over at the 15-minute, that actually crossed at 10. So that was a good, that's a nice, good long entry that we didn't have to wait a ton of time for confirmation. Because, I mean, you figure 2 candles is a half hour. So this is a perfect setup to go long here. All 3 time frames agree. If you'll even look, EMAD is on support and prints a beautiful bullish signal up. So you know that there's strength here. It's 10 a.m. Also in my volume indicator, these are just 2 average lines. One's a 21 bar, one's a 9 bar. If it's green, that means there's more bulls than bears. And if it's red, that means there's more sellers than buyers, or there's more bears than bulls. So I like to have confluence there as well. I see that both lines were green from this point. I know that dashboard style setup of green is go, red is stop, and it just takes off. Very, very, very nice move. And just keeps going and going and going, and that's beautiful. I mean, that is about as good of a directional option trade as you can get, because it's a very lucrative trade right there. Now, what I've done for the stop is I'm actually not using these upper studies whatsoever for a stop. You can, but I don't. I have these dialed in more so for entry and exit, and for going long or short, and not so much as a trailing stop. It's kind of redundant, because what I have done is I've added Merry Days, shout out Merry Day, ATR trailing stop lower study, and I've made this ATR Factor 175. So it's a little bit more stringent than the upper, but I want to get out. In hindsight, so you'll see, say we went long here, we took it all the way up, we printed a red signal here, so I would have been stopped out just before noon, so right here. Now you would see that it didn't even close below the trailing stop, but that's okay. I want a strong stop. I want a stop that's going to give me good advice. Not something that can change, not something that's based on whatever. I just want a stop that I can rely on. It's just, if it's right more often than not. Now, in hindsight, of course, it would have been great if I stayed in, but you need something in place for success. Like I keep saying, this is a zero-sum game, and no room for emotion. You gotta have a plan. You gotta have A+ setups. So I would have been stopped out here. And it did, of course, keep going. And that would have been great, but you need a plan, right? So what, in typical strategies, at least how I've always traded, is you'll take profit, you'll find a target, which, and again, I'm not saying you're going to ride this all the way up until you're stopped out. I mean, you should still come up with profit levels. This is previous day close. So that's a pivot. I probably would take some profits here at this pivot here. This yellow line is a trend line from the 4-hour chart. So I would maybe take profits around here. I have some lines turned off, so there could be a pivot around here. So I'm not saying just keep trading until your trailing stop hits, but you could certainly do that. But if you want to get back in, your target hits or you're stopped out, and it just continues back up, I mean, we're still well above the red. We're still a signal. We've never changed course. We're still green. We're still bullish. We're still in bullish context. What you can do now is you can re-enter upon break above the 9 EMA. Like I said, we're in bullish context, and now all I want is a sign of strength. I want a good reason to get in, and that's what the 9 EMA will tell you. Wait for a good close above. We get it here, so then you could ride it all the way up. You could ride it all the way up to 429.30, and then right here our stop hits. So you could have got another great move just based on the 9 EMA and the ATR trailing stop, and the fact that we're in this bullish context, as I like to call it. Now, just after that, let's see, is there a good short? Doesn't look like the 5 minutes. See, there was a short signal here since we closed below this red, but it went right back up, and this is the reason why you use multiple time frames, is because over here on the 5 minute, if I line it up with the 2, it doesn't close below the red until here. So if I took this trade, I would have been screwed because it went right back up. But if I waited for the 5, look where it is on the 2 minute. Perfect. That would have been the perfect entry right here because it goes all the way down to 427.70. And that would have been a beautiful trade. Now again, if you're going short, you could have the green be your stop. Or of course your traditional targets and support, resistance, and all of that, of course. But that's how I would use a stop when I'm short. Just wait for the green. Now that is a little bit of a, you're giving some away there in this particular instance. So, this is also could be, you could use the 9. Another instance when you can use closing above the 9 because we're short. So close above it is a sign of strength, and we don't want that if we're short. So you could probably stop out right here. Now let's move on. Well, before we do, we got another amazing long entry here. And keep in mind, I guess I haven't been mentioning it, but this entire time, the 15-minute has been above this green line. I've been meaning to say that. Not only are we getting confirmation in the 5-minute, but this entire time, the 15-minute has been above. It crossed at 9:40, well, 10, and really hasn't changed until we saw this nice dip here. So now that we go on to later in the day, around 2:10 or so, on the 2-minute, we get a nice bullish signal here, and it just soars up, which is great. Now let's see what it does on the 5-minute. Also had a break pretty much the same time, which is perfect. You don't have to, if the 2-minute gives you a signal, and then the 5-minute gives you a signal 25 minutes later, that's tough because you're not taking full advantage of that spike. You're giving some away. But in this particular trade, it pretty much lined up with the 2. And again, with the 15, it also closes right above shortly after. I mean, I guess it is a little bit longer after. But that's that extra confirmation. And you do get a solid move from 429.07 to 429.60-ish. So that would have been a perfectly good trade. The 2 and 5 are the most important to me. And then I'd like to see some confluence or agreement in DMI or volume or anything to do with the 15-minute, just to give me that slight extra edge and possibly reduce my trades. I don't want trades unless they're A+ setups, and if the 15-minute will steer you away from that, then that's all that matters. Let's try and find another good day here. This is a good short one. And while I'm switching days, that reminds me, I do keep the after hours on. I do that because, again, through vigorous backtesting, I have found personally that with the ATR setup, it does seem to work better when the after hours is on. Now, it's mainly because this first 45 minutes to a half hour is pretty important in terms of its ATR. If I turn this off, this could likely be a bearish signal because it's going off of the prior days. So that's how that would affect it. And that's what I have found. So after hours market, I have kept on. So right from the open, we get this buy signal in pre-market, which I don't take trades in pre-market. Maybe you do. So what I would do is just wait for the open, assume that we're still above this long signal, assume that we're still above on the 5, and see how it looks on the 15. Wrong day. On the 15, we had a nice cross pretty early on. So all three were in agreement. They're all above. ATR trailing stop doesn't print any red till here. So you could have potentially rode this all the way up to here, although here would have been best, and had a nice solid run right there, just based on ATR. I do have these recursive moving average indicators up, mainly because I do like the visuals, especially when maybe we're not trending. I like to watch this and kind of see, as the histogram gets smaller and smaller, you get a good sense of when it could be reversing. See, that's what I mean about why I like a 15-minute, is because we start to see some reversing not until 1:30, and it's already practically peaked. So for me, for directional options, short-term expires, I like the 2 and 5 and 15 just to kind of back it up. And that EMAD also comes in handy. If I see a nice short signal on the 15-minute EMAD and a nice short signal out of the 2 and 5's ATR, then that's a perfect reason to go short. Just like you see here at this 1040, we got a short signal, and this is a great example of why you should wait for the 5-minute, because the 2-minute, it does just bounce right back up. So if we were to wait that extra 5 minutes, well, actually this would have been, let me see, if we took the trade here, we would have bounced up, came back down. So yeah, this would have been a tough trade. All the lines are red, both averages, which is nice. You know that they're sellers. We got to close below on the 2-minute. We got to close below on the 5-minute, but not until 1050. So about here, and then shortly thereafter, it closes back above. So then therefore, they're not in agreement. So this trade would not be taken because of that. They're not saying the same thing. Shortly after we get this close below, so I guess potentially you would have taken this trade here, based on them being both below. But if you were to look at the 15-minute EMAD, there is no promising short signal here. You can tell there's some, some mixing up between bulls and bears, and they're fighting it out. Not till later do you get a nice clean print of going short. So again, you could probably wait till about here, about 11:20, and on the 5-minute, which is also the 11:20, nice solid close below, and it just keeps going and going and going, and rides back up that 9 EMA, which is the blue line, which I also like to use for stops and other purposes. Let's go to today real quick, and I'll end it there. There's not terribly too much to discuss here. Hopefully it's pretty easy to understand. It's not one of those ones where your charts are completely covered up. You can't see your candles. It's very easy. You don't even need the 9 EMA if you don't want it. You don't even need the recursive moving average if you don't want it. I do recommend the 15-minute EMAD, just in case you don't get that confirmation in ATR. If you do in your EMAD, it's still worth taking. I kind of do a one or the other, but 2 and 5 is very important to me, and something has to line up on the 15, whether it's the EMAD, whether it's the ATR, and like I mentioned earlier, you always want the DMI to match. You want some sort of short-term trend matching what you're seeing if you're trading short-term. And then a nice agreement in the long-term charts as well is always beneficial. So for today, right now it's 3:30 Eastern time on the 30th. On our 2-minute chart, we got above it really early on. We stayed above it. Nice green average lines on our volume. Pretty insane buying going on right here. These dashed lines represent relative volume bursts, so we know there's some strength here. 5-minute also above. Am I on the same day? Nope. Let's see what our 15-minute look like. Same thing, perfectly above. EMAD nice and strong right before open there. So you could potentially have ridden this all the way up, and look where the stop is. Stop out would have been here, which would have been pretty perfect. Probably even better up here, but that's pretty close. That's pretty good. And you can see that there's some agreement here in these red lines. One of the averages went red, so you know that there's a little flash of selling going on there, more so than buyers. We even had a nice bounce off this support level I had drawn. These are standard deviation pivots, which I also use as targets, and not solely rely on this ATR lower study, but targets are always good. You always need a plan. You can't just say, I'm just going to go until I stop out. I like to do that when I've already sold more than half of my position. So if I have 20 contracts, what I'll do is I'll look for the nearest resistance, nearest support, nearest pivot, standard deviation, whatever it is. That'll be my target. I'll hit that, and now I'm majority sold, and I can let the rest ride with just these trailing stop. And again, I do not use these lines as trailing stops. You certainly can if you just adjust it a little bit, I'm sure. And you can see they line up pretty good. I mean, it almost closed, it went below but didn't close below, and we got a flash of red here. But here we didn't even come close to this line, but yet it told us to stop out, which is smart. That's what you want. Hindsight, sure. I would have loved to ride it all the way up here, but that was actually a pretty big dip. You never know what's going to happen, so you want something that you trust. The two lines were red at that point in time as well, so that would have been a perfectly fine place to get stopped out, especially after this pretty insane move here. Now let's see if it lined up with the 5. We got that cross on the 2-minute at 12:02. On the 5-minute we got it at 12:15, which is great because if we entered just on the 2, we would have gotten in on this dip and then the rip. But if we waited for the 5, we would have just stuck to the rip. We would have never even rode through this chump change here. So then we ride it all the way up. We would have got stopped out here, just like we mentioned. 2 red average, red ATR, and ride and ride and ride. And then now that we're in bullish context, you could wait for it to be green, you can wait for the averages to be green, and you could just buy it whenever it breaks the 9 if you just want to scalp it. And that would be perfectly suitable. So here we go, rolling into close here. It's battling right now with the green line here. We're still way above it on the 5. We never closed below, so still in bullish context in the 5, potentially about to be in the 2-minute, very much so in the 15-minute. But that's all I have. Couple things. My colors are candled based on a scalper upper study. I'll be sure to call out the author of that. That just helps me stay in trades a little bit longer. another layer of confirmation without taking up space on my chart. So I like to keep that there. Thank you for listening. Please let me know if you ever have any questions, and glad to help, and happy trading. Good luck.